A rate hike may be on the cards for the U.S. in the near future. The minutes from the Fed's latest meeting suggest policymakers are generally in favor of raising rates next month. Hwang Hojun tells us more.
The U.S. Federal Reserve has agreed that a rate increase is appropriate relatively soon. That's according to the minutes of the most recent meeting of the Federal Open Market Committee, which was held around a week before the U.S. presidential election. According to the minutes, released Wednesday, most voting members agreed that it would be appropriate to raise the target range for the federal funds rate relatively soon. Some argued the move should be imminent, arguing that a hike is needed at the next meeting to preserve the Fed's credibility. They cited strength in domestic consumption, new records in stock indexes, low unemployment, and somewhat higher inflation in recent months, as signs the economy is on the right track. The minutes also state, however, that voting members saw an equal risk that the economy would over or undershoot their forecasts. In an appearance before Congress last week, Fed Chairman Janet Yellen used the same language to hint at an upcoming rate hike. She said the bank could act relatively soon if the economy continued to improve. Some experts also pointed to the results of the presidential election as a reason for a rate hike. They say that if Donald Trump makes good on his campaign promises for tax cuts and big spending on infrastructure projects, it will most likely increase the federal deficit, which would likely translate to more borrowing and that could put upward pressure on inflation. Analysts say the Fed will almost certainly raise rates by a quarter point at its December 13th to 14th gathering, barring a major upset to the economy. The Fed's benchmark rate is currently in a range of 0.25% to 0.5%. Hwang Hojun, Arirang News.